July, KSL News reported that 78 cities and other entities across the state will propose raising taxes this year. Our city is one of those, and this video is to help explain why. To begin, the last thing anybody wants is a tax increase, and that includes city leaders. Inflation's hit all of us hard the past couple of years, over and above the painful price hikes we've seen with our water and electric bills. But the fact is, people are getting hit with this all over the country. If we combine the annual rates of inflation since 2020, we've had a nationwide increase of almost 18% in the last 3.5 years. Some construction materials have gone up more than that in a single year. In turn, municipalities are feeling the pinch in everything from road repairs to cost of living increases for employees. And that can't help but translate into higher property taxes. So, in what specific ways does all this impact us here in Woodland Hills? Well, let's look at our budget. Now, the past couple of years, these videos have taken residents on kind of a tour of the city budget, looking at things line by line and explaining how the budget works. Those videos are still on the city YouTube channel, and they can help you interpret this year's budget if you'd like to review the whole thing. You'll find the budget posted on the city website. In this year's video, though, we're taking a little different approach. First, let's talk some bottom line numbers. To create the city budget, city staff first submit budgets for their individual areas. This year, those needs added up to over $2.6 million. But our yearly revenue was only projected to be around $1.9 million, so that put us about $650,000 over budget. So our mayor and finance director went to work and whittled the budget down to around $2.15 million. To do that, they made a lot of cuts, but they also had to plan for a little over $1 million in property taxes. That was around $200,000 more in taxes than we budgeted for last year. To cut that down, the City Council moved $110,000 from our Capital Projects Fund. This was actually money that was left over when we bought our new fire truck, because the financing for it was cheaper than we expected. That offset our property tax increase and dropped it to under $90,000. Then we got another reduction. Our budget was actually drawn up in April, and at that time, we estimated that our property tax allotment from the state would be around $850,000. But when they sent us the actual numbers a couple of months later, it was $889,000, almost $32,000 more. That cut the final amount of our tax increase to about $55,000. The Utah Taxpayers Association estimates that to be around $99 a year for each household in our city, or about $8.25 a month. Okay, so what's driving this tax increase? Well, let's start by looking at some of the most significant items in this year's budget. Like for us at home, utility costs for the city are going up, from $33,500 to $47,000 this year. That's nearly $14,000. Most of that's electricity. Then there's snow plowing. 2 winters ago, salt only cost us about $30,000, but this year we were up over $50,000 because we had so much snow. We're keeping it there for 2024 in case the trend continues. Our attorney costs continue to be high, even though much of the legal action connected to an ongoing resident dispute with the city has been resolved. Unfortunately, there are still some loose ends, and those could be expensive. And our insurance monies are about exhausted, so most of what remains we'll have to pay for out of our own pockets. Police services are going up about $10,000. That's due to general inflation, but also because our officer has been promoted to sergeant. He's a little higher paid now. This is a brand new budget item this year called fire fuel reduction. We've hired 3 firefighters to clear brush throughout the city to increase our wildfire safety. Now, this looks like it's going to cost us about $120,000, but not really. Because if we look under revenue, we actually expect these firefighters to bring in about $150,000 when we hire them out to work state and federal wildfires. So we should end up making about $30,000 on the deal. Roads are one of our biggest expenses, and we always struggle to keep up with it. This year we're budgeting $100,000 for general maintenance, but unfortunately, the contractors tell us we should be spending $250,000 or more every year to prevent deterioration, and that's assuming the road's in good enough condition to do preventive maintenance. A lot of our roads need to be completely redone. This is a budget item we always have to compromise on because we never have enough money to cover it. Finally, the salaries and wages of our city staff are always a significant expense. These appear in several spots on the budget because our people are paid out of different areas. They include administrative, roads, and snow removal, among others. And increases here will fund things like cost of living adjustments and hiring a new deputy recorder. Now, this seems to be an area a lot of our residents focus on. While many feel our staff wages are well earned, others suggest they're too high. Well, here are some things to consider. First, in 2020, a study was conducted by one of our residents who worked as a professional in human resources and position classification. He compared our staff wages with others in the state, and his data was used to determine appropriate compensation. Although, to be fair, the past couple of years we may not have kept up with inflation. By the way, the wages of all public employees, including ours, are available on the Transparent Utah website because they're considered public information. You can look them up there if you'd like. Second, some suggest it's time for another salary study. Well, that raises some questions. This time around, we'd have to pay for it. Do we want to expend those funds? And what would it do to your morale as an employee if your employer were continually questioning whether you were worth what you were paid? And if the new study showed we were actually underpaying our staff, what? Do we raise taxes even more? Third, some say, well, if we don't have the money, we should just cut salaries. If people leave, we'll rehire. Okay, but in this job market, that might be easier said than done. Jobs are plentiful and applicants are scarce. For example, when we opened our position for a deputy recorder last November, the city got just one applicant. We hired her, but she left after 3 months to take a position elsewhere. So now we're looking again. The truth is, those acquainted with our city staff find that they excel at what they do. Many fulfill multiple job descriptions, and they often sacrifice personal time to serve the city. We feel fortunate to have them. So these are some of the more significant expenses in this year's budget. Now let's look at some challenges with our revenue. How does Woodland Hills compare with other Utah County towns in our ability to raise money and pay our expenses? Well, in reality, it's hard to make a valid comparison between us and any other Utah County town. Why? Well, we have some unique differences that tend to limit our revenue. First of all, it's not hard to see the differences in housing density between us and towns like Elkridge or Payson. Larger building lots in Woodland Hills mean fewer homes per square mile and fewer property tax payers. As a result, we each have to pay a bit more. Not to mention that the slope and climate of mountainside roads cause a lot more wear and tear than down in the valley. That's another added expense we deal with. And for most cities, sales tax is a primary source of revenue. Woodland Hills has kind of a unique problem here, too, because we have very little business in town. It works this way. When sales tax is generated by a business located in a town, say Spanish Fork or Salem, that town gets a generous share of the tax, around 50%. Another portion goes into a statewide sales tax pool. And because we have little or no commercial activity here, any sales tax revenue we get has to come out of that pool. Those funds are distributed by population, and we're a little town, so we get just a tiny fraction of those funds. Our 2024 budget projects around $260,000. But look at the sales tax revenue projected for Salem and Spanish Fork. The difference is pretty staggering. Now, we're not complaining. Less business activity, larger lots, more breathing room and woods and wildlife. That's why most of us moved here in the first place. But it also means there are comparatively fewer of us to bear our city's expenses. So the bottom line is this: nobody likes a property tax increase. And our city leaders have worked hard to find ways to cut expenses and put our money to good use. But there are some unique things about our city that make it more expensive to maintain the services we all want and need. On the other hand, many of those same things are what give rise to the lifestyle we love so much as residents of Woodland Hills.